Hey guys, let's discuss a little bit Bitcoin and cryptos into this video. And yeah, Bitcoin is trading at about 20,130. Tried to rally a little bit earlier in the session towards 20,800 and it reversed. Now the price action here, it's it's neither bullish nor bearish overall. I think there's still some downside levels that have to be cracked before we get more confidence that this thing is going to move into one direction or another, but or at least to the downside more than to the upside by the way this kind of looks. But I mean, if you look, right, 18,600 is still a pretty big support level, and we'll see if it's going to get retested. I think if it is, it's probably going to give way. Now, every time you have a failed rally like this, that's not a good sign. And for this to remain sustained, you kind of have to stay above this 19,950. So if I go to a 1 hour, we were trying to give this rally the benefit of the doubt and say that fine. Let's say that a wave 2 of C of 2 was finished back here, and you begin with a wave 1, you get a wave 2. The market's rewarded you after the setback with a with a decent rally. I mean, it was, let's say from the low to the high here, it was about a 13%. Not a lot, but still pretty decent. So now you're subdividing that into a 1, 2, 1, 2, 1, 2, 3, 4, and 5. You complete this micro third, you're doing a fourth, and then, you finish up a fifth of a third. We were thinking for a while that this could be a triangle with the push higher, but that did not happen. Now, for this to still be a triangle, there would have to be some kind of a wave, A in here, followed by a B, C, D, and E. So it would take quite a long time for this fourth wave to form. And what that does, it basically just distorts the picture between the distance traveled in the wave 2 and the distance traveled in the wave 4. So at the, the last resort here for this wave would be the prior fourth wave in here, which is this fourth wave in here, right? So that's why I think that's important, this 19,950. Also, you really don't want the fourth waves at a lower degree of trend to get into the territory of the wave 1, even at a larger degree of trend. You want these things to happen much higher, right? Because if this is a true impulse and it's a true bull market, it's a true move higher, these fourth waves here, they got no business being in the vicinity of this wave 1 minuet. Right, this is a higher degree. So we're looking 2 degrees lower. We're looking this wave in here, fourth wave, 1 degree lower, right? And then you're looking at another degree even lower than that. They should have been somewhere up here into this neighborhood to allow for this wave to form. Okay, so that's kind of where we are. Now, let's say that, just like I've been repeating, let's say that I'm deleting all of this. Just kind of delete all of that and just, the heck of it, delete even this. Delete this move. And just say, although I'm still fine with it as long as you're not breaking below these levels. If you're starting to break below these levels, I don't think you're going to be at the fourth wave, and I think things are going to start to look uglier for Bitcoin. But let's just delete that and just allow it, since this is much bigger. Let's just allow for this fourth wave to continue. Now, I don't know how you would count that, because the internal subdivisions in here are very ugly, right? You don't have a complete structure. You can't really go. Could you go? Here's one way you could go. You could go 1, 2, 3, 4, and 5. And be done that way. But this is me kind of trying, how you could sometimes force your way into some of these counts, even though they're not, the best way to do so. But that would be a 1, 2, and we would have to study it. That third wave might be the smallest wave. Actually it's not. Let's just measure really quick. Yeah, see, it's just a touch. It's just a touch bigger than the wave 1. So we're good. It's not the smallest wave. It's not the smallest wave in the sequence. So you could do that. You could just be, let's say, if you really kind of wanted to keep this fourth wave still alive under those circumstances, this would be one way to do it, where you would go in a 1, 2, 1, 2, 3, 4 with an extended fifth out of there. This is a triangle in an A, B, C, D, E formation, 1, 2, 3, 4, and 5. You complete this larger third, and now you're doing, let's say, a triangle in this fourth wave, or a maybe a zigzag. Not a zigzag is not, maybe a flat, or not. A flat doesn't look good. Maybe a complex move. You can do a WXY, or let's say a full-on triangle that still develops kind of like that. Okay, so this is how the bulls can still hang on to this sort of a bullish build on this market if you're not penetrating this wave 1, you're not getting below this wave A, right? You're gonna have to stay above this one, and then you got to push back up higher. and continue to go, let's say, an A, B, C, D, and E, or just in a simple A, B, C out of here, or WXY, fourth wave moves over, and then you're ready to push higher. But this, in my view, I think this is still a pretty dangerous proposition. It's still valid, and that's why I'm looking for these levels if they get taken out, right? That would make this entire move more of an ABC move rather than a 1, 2, 3 move, right? Which sends us over to discount in here. That's why you have to analyze this, guys, by the data that we're getting every single day. You know, you can't really like go to sleep and say, no, it's bullish because it's like that. Like, you know, what if what we thought it was going to happen, it doesn't happen? You know, that's pretty much all it is in Elliott wave, right? We constantly are hit with new data and we're analyzing it as it comes to us. And we're saying, is the initial thought still valid? Is it that something changed in the meantime that makes me change my view in here? And we constantly have to reassess that, especially on these kind of lower time frames, because they shift a lot. So at a larger time frame, I mean, the 1, 2, 3, 4, 5 idea is still valid until this actually climbs much higher, and then you have to take that off the table, right? But at this degree of trend, you know, this fourth wave, it's still a viable interpretation. You know, the distance is fine, the shape of it is fine. So there's nothing here that can say this cannot be a fourth wave. If anything, you know, it looks like it's one. It's much harder to count this formation bullish than anything else, and you can see how you're struggling. When you're struggling like that, there's something fishy about this count, about any bullish count. Because I got a question on Twitter about, hey, don't you see that the S&P 500 has got a leading diagonal of the lows? Well, if you're bullish, you're going to see a bunch of leading diagonals, okay? But those things, you know, are not that often, and they're not, and they're very risky because it's choppy and overlapping. And when you're in a downtrend, that means usually correction, right? Now, they do happen every once in a while, but they have to happen after, let's say, huge sell-offs and maybe other circumstances. But more than not, that would be the last place you would look at to analyze rather than the first place, right? So if somebody's, let's say, wants to have a bullish narrative, they will look for a leading diagonal. And I'm guilty of that myself too. And that's an important lesson, I think, for everybody, because those things, when they're overlapping and choppy like that, they could just be corrections in a downtrend. So anyway, this could be just a simple ABC up, that this could terminate back here like that, and you could be done in the C wave. Now, that would still tell you that there might be still some sideways move in here, maybe come back and still kind of pinch a little bit more in here, before you kind of finished a knee wave and then you sell lower. So we'll see what happens. But I think once you break below 20K, things become very vulnerable again in Bitcoin. Okay, so that's kind of what I'm watching there. I'm not going to go to the rest of the field in here to the daily candles, because let's see if there's anything I can see. Yeah, I mean, if it wants to reverse, it should reverse from here, because you kind of pulled back halfway and you're back towards 21 day. This should provide support, let's say, but it's such a weak setup that I have my doubts, but it's possible. I mean, it's trending up a little bit at 21 day. We're above the 50. So we'll see what happens here into tomorrow, and if the equity markets are able to kind of come back. But today was the day they were supposed to do that, and they didn't. They kind of fell back. Well, maybe it was an overreaction to the Fed, and you could return to be bullish tomorrow. But we're going to keep a kind of close eye on that. Now, I wanted to kind of go back and talk. I put a chart of LITECOIN out there as well, and you're just hitting the 20-day moving average, which is declining in here, right? So you got to climb back above it to become more bullish. You got to get back above 67, 80, and I still think that this where are you? I have this, I think, in the chart room, if I'm not mistaken, as WXY. And I'm looking at this as an A, B, and then some kind of an ending in a C wave, and then go up in an X wave, and then do another ABC. So that's, I don't like the ABC idea in here, because you don't have, if you're looking at it as a zigzag, you don't have a 5-wave move. If you're looking at it as a flat, you don't have a 5-wave move in the C wave. So no matter how you look at it, this does not work as a 335. Okay, because this is not a 5-wave move, that's a 3-wave move in there. So that's, this here messes that up in my view. So I think it's better counted, and I've done this, where did I do it? Back in here, like this. And okay, so let me go back to this, right? If it is, then you have to start to build a larger third wave. Then you have to look something like this. 1, 2, 3, 4, 5. So you go in a wave 1. Let's say that was your leading. Maybe there was a little bit of a flat in there in the second wave. So A, B, C, and then you got to build this before you start to get bullish Bitcoin, Litecoin. And you would have to take this off. You would have to get back above the base. So there's a lot of work that needs to be done in here. For all intents and purposes, this still looks bearish, okay? Because it's just in a big downtrend still, and you know, with whatever else happening out there, thinking of it from this perspective, even if you make a slight new high above that high, you know, it could be just a very simple A, B, and then up in C, and then you're still prone to reverse lower, because that's what markets do when they're in downtrends. You know, they kind of get hit to the downside more than they are to the upside. So I'm keeping an eye on this very closely. You know, I know that maybe it's not something that you want to hear if you're bullish crypto, and I'm bullish as hell. I own a bunch of LITECOIN, right, Bitcoin, and the rest of the stuff. But I gotta stay. I gotta kick out my bias and just kind of stay true to the price section that's now. And for right now, it's in a decline, and there's no positive signs out of this. Okay, just a little bit of a rally today doesn't mean a lot. And that's kind of what I want to draw your attention to. Don't be afraid to accept that some of these situations could become true. You know, especially when you continue to have a series of lower lows and lower highs, declining moving averages, you know, a higher, tight monetary conditions in here, because you got to think about who's going to buy Litecoin, right? Like, who's going to buy Litecoin? The guys, you know, trading, you know, with a $10,000 account or something like that. I mean, you gotta have millions and millions and millions of dollars poured into this market, right? Hundreds of millions of dollars to move this thing higher into a bull market, and money is expensive right now, so we got to think about that. All right, let's take a look at Dogecoin as well, since it's a very, very lovely. You know, look, this ain't bullish. This is probably coming down. Okay, you've had your you know, you've had your rally in here. You've done, I think, probably a fifth wave in here, and we're, like I said yesterday, I think you're looking for a drag lower for the next few months in Dogecoin. So if anybody's still bullish and it did not take profits after this move in here, then I don't know what they've been drinking, but it's important to take profits. If you are gifted with a third wave and a fourth and a fifth, like, what in the world are you waiting for? Okay, that is Dogecoin, and then you know, the other one that we touched on yesterday was BNB, which just sold off about 1% in here. Excuse me about that. Just a little bit of a reaction from there, and that's kind of what I'm afraid of in this coin as well, in BNB, that this resistance is not going to get penetrated, and there could be some more trouble. But, you know, again, if you're starting to break back below 296, 300, I think you're very prone to move lower, and then if you're getting below 270, I think you're done and you're crashing below 200 and below, maybe below 180. Okay, I'll leave it at that on this positive note, guys, and I'll talk to you a bit later. Bye-bye.